Hey everyone, welcome back to the channel. You know how we love to delve into intriguing financial stories, and today we've got a real doozy lined up for you. Today we're going to crack open the enigma that is Warren Buffett's investment strategy. We'll be delving deep into his iconic portfolio, one that's regarded with awe, respect, and perhaps a touch of envy across the globe. Well, let's dive right in, shall we? You might not believe it, but I have some mind-boggling statistics to share with you about the composition of Warren Buffett's. It's a fascinating mix that might surprise even the most seasoned investors among you. Did you know, and brace yourselves for this, a substantial 71% of his massive $358 billion Berkshire Hathaway fund is tied up in not 10, not 20, but just 4 stocks? Yes, you got that right, only 4 stocks. Incredible, isn't it? The sheer magnitude of it all, 4 stocks. It's hard to grasp how, in the universe of investment opportunities, Warren Buffett has zeroed in on these specific 4. It's even more challenging to comprehend the immense faith places in them, to let them dominate such a significant portion of his portfolio. And that's not all. Today we're not just talking about numbers and statistics, we'll be delving deeper into these 4 investments, dissecting their pros, cons, and potentials, and exploring what makes them stand out in Buffett's portfolio. I'm really looking forward to hearing your thoughts on these unique holdings. Would you consider buying them, or perhaps selling? Are you intrigued, curious, or maybe even inspired by Buffett's investment strategy? So, stick around, and before we continue, if you're interested in investing, don't forget to subscribe on our channel. First up, let's talk about the big kahuna, the Oracle of Omaha himself, Warren Buffett. A name that is synonymous with the American dream of financial success. Buffett is esteemed globally for his shrewd investment strategies and his seemingly unerring instinct for picking winners in the high-stakes game of global finance. Now here's a curious piece of trivia that you might find fascinating. 46.3% of Warren Buffett's investment portfolio is lodged in Apple Inc., a multinational technology company that he once assiduously avoided. It's interesting to note that Apple, along with the other technology mammoths of the world, were companies that Buffett had once tended to sidestep, but as they say, times change, and apparently, so do investment strategies. Recently, in a surprise move that left the world of finance abuzz, Buffett went ahead and added even more Apple shares to his already substantial stash. This move seems to be in line with Buffett's long-standing philosophy of buying and holding onto stocks of companies that he believes have strong and sustainable business models. Now you may be wondering, Apple? What about this company caught the discerning eye of one of the world's most successful investors? Well, the answer lies in the unique position that Apple holds in the global corporate arena. It's one of the most valuable publicly traded companies with a market cap just shy of a staggering $3 trillion. Apple is a key player in both the S&P 500 and NASDAQ, 2 of the world's most influential stock exchanges. It's a company that has consistently exhibited a bullish trend, a sign of its robust financial health and strong business model. So, against this backdrop, it's not difficult to see why Buffett chose to invest in Apple. But the question remains, would you the same? Would you follow in the footsteps of the Oracle of Omaha and invest in this tech giant? Do you believe in the power of Apple's innovative products and its market dominance? Let me know in the comments. Next on the list is Bank of America, which occupies a substantial position in Buffett's portfolio. This banking giant is a significant player, commanding a whopping 10% of Buffett's investment mix, which translates to a staggering $35 billion. It's a notable allocation, indicating Buffett's confidence in this financial institution. What makes Bank of America interesting is its current market standing. It's trading close to its theoretical net worth, also known as its book value. This is a key indicator in financial analysis, as it can expose an intrinsic value. Companies trading close to or below their book value can signal a potential value for investors. This means that the market value of Bank of America's assets is approximately equal to the company's market capitalization. An intriguing proposition, isn't it? Of late, we've seen several market fluctuations. The bank has experienced recent pullbacks, with its current price standing at $33. This drop in price might seem alarming to some, but for seasoned investors like Buffett, it could signify a prime investment opportunity. He is known for his knack for turning market volatility into profitable ventures. So, the million-dollar question is, could this be a golden opportunity for Warren to rake in a spectacular 44.5% return on investment if it bounces back to its previous highs? This would mean that if Bank of America recovers and revisits its past zenith, The profits would be substantial, a dream scenario for any investor. So, let's turn the question back to you. What do you think? Can Warren Buffett capitalize on this potential windfall? Will Bank of America prove to be a gold mine, contributing significantly to his portfolio's overall gain? What do you think? Now let's shift gears to American Express. A titan in the world of finance, this company has been a part of the economic landscape for decades, and has proved its might time and again. Interestingly, Mr. Warren Edward Buffett, the Oracle of Omaha himself, has been involved with Express since the year 1991. He is a man known to have the Midas touch, his investment strategies and decisions standing as a beacon for investors worldwide. This historical data itself makes the company exceptionally notable. American Express, often referred to as Amex, holds not just a mere sliver of his esteemed portfolio, but a considerable portion. This fact compels us to take a closer look at the company. Why would a legendary investor like Buffett dedicate such a significant part of his portfolio to it? There must be something unique and promising this company that has drawn the attention and trust of an investment maestro like Buffett. But now comes the exciting part. The twist in the tale. Unlike its counterparts such as the Bank of America, American Express is still galloping high in the race. It's still bullish, with its market shares showing an upward graph, its shares representing not just monetary value, but also a symbol of economic resilience and consistency. Despite the ups and downs of the market, the twists and turns of the economy, American Express continues to ride high, proving its worth and standing tall. This naturally takes us to the million-dollar question. Given the current market conditions, what should an investor do with regards to American Express stocks? Should you hold on to it, tightly grasping onto the shares in the hope of future growth? Should you reduce, carefully shedding off some part of the stocks to balance the risk? Or should you perhaps go all in, with unwavering faith in its stability potential? The decision is indeed a complex one, with multiple factors swaying the scales. Would you hold, reduce, or perhaps go all in on this one? Tell me your thoughts below. Last but certainly not least, the classic Coca-Cola ticker symbol KO. The legendary investor Warren Buffett, the Oracle of Omaha, has been sipping on this investment for an incredible 36 consecutive years. Now that's an impressive figure, isn't it? Buffett, famously known for his long-term value investing approach, has trusted Behemoth to be a part of his portfolio for such an extended period. It's a testament to the enduring value and stability of this iconic brand. Coca-Cola may not be the flashy tech company that rides the wave of innovation or an emerging market star that captures the imagination with its exponential growth. Instead, it's a distinguished stalwart of the market, a constant presence that barely wavers. It doesn't dazzle with futuristic visions or promise to change the world overnight. Rather, it offers a solid, steady, and reliable investment opportunity that has stood the test of time. Coca-Cola commands a global reach, and it sells over 1 billion cans every year. Just let that sink in for a moment. 1 billion. And that's just in cans. The sheer scale and reach of Coca-Cola's operations are mind-boggling. It's not just a drink, it's a cultural phenomenon that spans across decades and continents. Remember, in investing as in life, simplicity can often be a winning strategy. It's the simple things that often hold the most value. Coca-Cola's business model is simple. Make a drink that people love, market it well, and sell it globally. And it works, year after year, decade after decade. So the question, do you have a soft spot for Coca-Cola in your portfolio? It's been Buffett's trusted ally for over 3 decades. Perhaps it's time to take a leaf out of his book and consider this evergreen stock, a symbol of consistency in a world that never stops changing. Now, here's a challenge for you. Out of these 4 stocks, which one catches your eye the most? And which one do you think doesn't meet your investment criteria? I'm interested to hear your thoughts. Share your responses in the comments section. I always enjoy hearing from you all. Remember, we can learn a lot from the investing philosophies of professionals. Consider how Warren Buffett, one of the world's most successful investors, approaches the market. His demeanor, always calm, and his approach, consistently calculated, has proven to be effective time and again. Buffett's decisions are backed by thorough research and a deep understanding of the businesses he invests in. His patience and ability to remain unswayed by market fluctuations are worth emulating. His portfolio, heavy on undervalued assets, is an inspiration for many. We can gain valuable insights from his investment strategies. Today we delved deep into his top 4 stocks, and I hope I was able to shed some light on why these are his favorites. If you found value in this video and want to see more content like this, do give it a thumbs up. Also, do hit the subscribe button and join our family of learners. Until we meet again, let's strive to keep our portfolios bullish. Take care.